There are different tax forms that you need to file throughout the year if you own a business. Two of these forms, 940 and 941, are related to employment taxes. Keep watching to find out the major differences between them. An overview. Form 940 is used to report federal unemployment taxes, while Form 941 is used to report Medicare, Social Security, and federal income tax withholding. Generally speaking, Form 940 is due every January 31st, while Form 941 is due 1 month after the end of each quarter. Form 940 explained. The IRS Form 940 is the federal unemployment tax return form. Any business owner that has employees working for them must file a 940 form with the IRS. The purpose of this form is to report your Federal Unemployment Tax Act, FUTA, which aims to support those who are actively seeking employment financially. Specifically, the FUTA tax applies to the first $7,000 you pay each of your employees. If there are FUTA exempt payments, you don't factor those in when calculating the $7,000. It's also vital that you don't deduct FUTA obligations from your employees' wages. Business owners will need to file Form 940 under the following conditions. You paid wages to an employee that exceeded $1,500 within a single quarter. An employee showed up to work at least once during 20 of the weeks within the last calendar year. To further clarify the second scenario, if an employee showed up to work for even an hour for 7 days, it counts as a week towards the 20. So if this scenario occurred 20 times within a calendar year, you would be obligated to file Form 940. This also includes part-time and temporary employees. Form 941 explained. Employers are required to file this form to report their quarterly taxes. This includes things like Social Security, Medicaid, and federal income taxes. These taxes are required to be withheld from your employees' wages. The amount may change depending on their annual compensation. The amounts that you're required to report on Form 941 include employee wages, withheld federal income tax, employer and employee Medicare and Social Security taxes. After you file a 941, you must file this form during each quarter, even if you don't have any taxes to report for that time period. They're due on the last day of the month following the end of each quarter. If you pay your taxes in full before the end of the quarter, however, you're given an extension of just under 6 weeks to file Form 941. This can be particularly beneficial for companies that are notably busy towards the end of each quarter. In general, though, it's a good practice to have your forms ready before the standard due date. The key differences. The main difference between the two forms is that Form 940 doesn't apply to companies who don't have employees working for them. These business owners are still responsible for paying state unemployment tax, though. Additionally, Form 940 is required to be filed annually, while business owners must file Form 941 quarterly. Most owners are required to file Form 941. There are a few exceptions, including those who hire employees seasonally, employers who hire household employees, employers who employ agricultural employees. Get help. It's crucial to understand your tax obligations when it comes to these forms in order to avoid incurring tax penalties or owing money to the IRS later on. Taking on the unnecessary stress of filling out tax forms may seem difficult, but the good news is it no longer has to be. Contact us to find out more. And if you enjoyed this video, be sure to like, comment, and subscribe.